Let's bring on Reed Womack with Swan Bitcoin. Reed, welcome to the show. Can you answer Clark's question? And it's not Clark Kent. We figured that out.
Absolutely. Thank you for having me on. Yeah, to answer Clark's question about dollar cost averaging, it's a way to accumulate slowly a position in any sort of asset. And it's been around for a very, very long time. It's a common investment technique and style. But it particularly works well for Bitcoin because the long term of Bitcoin is headed up. The short term, though, is very volatile. And so just this past week, for instance, we saw it drop from, I think, 12.3K down just down to $10,000. And if you had sort of been trading that, or you had bought in high earlier, now your Bitcoin would seemingly be worth less. If, however, you have a steady dollar cost averaging approach, you would have bought a little bit higher, you'd have bought a little bit now, next week you'll continue buying a little bit more, and then in the long term, you would end up actually with a lower average cost basis.
I saw a statement that, we all know that all the people, all you watching may not know this, but the people like Reed and I that know that Bitcoin in 2017 hit $19,000. And it wasn't that high for maybe but 24 hours, but it was high for a while. But even if you started buying at $19,000 and it's $10,000 today, if you'd been buying on a regular basis for those 2 years, you would be up right now, even though you started buying at $19,000. And I think that's the whole concept of dollar cost averaging is when it's this volatile of a product, you're going to come ahead. But I think the thing that really happens, Reed, and tell me if I'm wrong here, is that most people can set up dollar cost averaging, like with your company, Swan Bitcoin, and if they set it up, they really don't look at it that much. So they're not going in every week to buy the Bitcoin, and then they're not going, oh my gosh, 3 weeks ago I was buying it at 12,000, now it's 10, I'm all worried because it's just happening behind the scenes. And I talked to someone this morning here in the studio, and I had talked him into setting it with Swan, and he buys $10 a week. And he goes, I need to go look and see what that Bitcoin is doing. He hasn't looked at it since he's been buying it. So he's just been buying it where if it wasn't for something like a product like swanbitcoin.com, he'd be going online every week, and he might go, oh, I'm not buying it. It's going down. And that's when you're wanting to buy, right?
Exactly. When I first got into Bitcoin, there wasn't really a product like this. And so I was wanting to buy it consistently. But every time it would go up, I was convinced, oh, it's going to keep going up. And so I'd make a big purchase then. And then every time it went down, I was convinced it was going to keep going down. And so I'd hold off on my purchases. So actually, over time, I ended up getting a higher sort of average cost of entry than I otherwise would have had it been automated and set up.